Hi, I'm Bobo. In this week's recap, Hong Kong raised a number 8 typhoon warning signal as Typhoon Talim swept south of Hong Kong. But that didn't stop buyers from buying new homes. As the storm raged on, one buyer bought a flat at Double Cove Starview Prime in Ma On Shan. Measuring 564 square feet in size, the two-bedroom apartment with storage room was sold for $11 million at $19,504 per square foot. The buyer was originally renting a home in the same district, while the original owner was a retiree who purchased the unit for $8.45 million in 2016, booking a profit of $2.55 million, or 30% in appreciation. In Tin Shui Wai, about 5 transactions were recorded this month at Central Park Towers in Tin Shui Wai, with some taking place on the weekend while the Typhoon Warning Signal No. 3 was in effect. One buyer who lived in the area bought an upper floor flat in Block 6 for $5.5 million at $11,134 per square foot. The two-bedroom apartment measured 494 square feet in size. The original owner bought it in 2020 for $5.2 million and put it on sale again just after 3 years to accommodate a growing family. However, including additional expenses, they lost about $580,000 in profits, indicating a depreciation of 10%. This isn't uncommon, as more buyers entering the market have had to sell their homes at a loss. According to property agency statistics, the loss ratio of second-hand residential properties hit 16% in June, marking a 2.7% increase month-on-month. From this data, we can see that the shorter the holding period, the more likely homeowners will incur losses. For buyers selling a flat purchase within the last 5 years, there's a 57% chance that they'll face profit loss. For those with a holding period of 5 to 10 years, the ratio drops to 18%. Essentially, the holding period for profit making is at least 10 years plus. Though some owners were willing to sell flats at a loss, the secondary market remained still during the weekend, as most buyers were deterred by Typhoon Talim. As a result, sales for the city's top 10 blue-chip housing estates hovered around the single digits for the 11th consecutive weekend. According to Hong Kong's 4 biggest real estate agencies, only 3 to 5 transactions were recorded on Saturday and Sunday, marking a week-on-week drop of up to 57%. Among the leading estates, an owner at Tai Kwu Shing in Quarry Bay, who held their first-hand home for over 40 years, sold their 3-bedroom flat for a huge profit of over 10 million Hong Kong dollars. This was an upper floor flat at Koi Sum Court with a saleable area of 685 square feet. The 3-bedroom flat was sold for 11 million Hong Kong dollars at $16,058 per square foot. The original owner bought the flat back in 1977 for just $183,000, thereby making a huge profit of $10.8 million, or 59 times the original price. Turning to the first-hand market, 2 new developments went on sale this weekend. However, sales fell flat despite the government's newly relaxed mortgage rules. Co-developed by Swire, Sino, and Carey Properties, La Montagne at Wong Chuk Hang offered mid to high-priced homes. In its first sales round, discounted prices ranged from around $9.7 million to $30.1 million, really benefiting from the new mortgage rules. However, out of the 108 units put up for sale, only 48 units were sold, less than half the units available. High Park in Hung Shui Q, which offered small to medium-priced homes, met the same fate. In its first sales round of 188 units, the discounted prices under $10 million made no difference, as the project managed to sell just 65 flats, or 34% of the available units. Overall, however, the first-hand property market saw marginal improvement from last week, with an increase in transaction volume over the past weekend. Besides La Montagne and High Park, the market saw 17 first-hand transactions at Henderson Land's The Holborn project in Quarry Bay, with sold flats ranging from $5.9 million to about $14.4 million. Over the weekend, the first-hand market sold 145 homes in total, marking an 8-time increase week-on-week. All in all, things seem to be looking up for the first-hand market this month, as transactions are expected to exceed those of last month, with about 530 deals recorded in July thus far. That's already 85% of June's sales. However, there likely won't be a huge difference, as CK Asset's 21 Borrett Road deal fell through just last week, perhaps indicative of a bearish market sentiment. The 21 Borrett Road luxury project offers 152 flats and 242 residential car parking spaces. It was meant to be sold to the Singapore fund LC Vision Capital 1 for $20.8 billion, with the deal originally finalized in September of last year. That was until the fund forfeited the $2.08 billion deposit last week and terminated the deal altogether, making this the largest forfeiture case in Hong Kong's history. According to analysts, the deal collapsed due to high interest rates and property market downturn. Addressing the aftermath, CK Asset said that the deal would not adversely affect company business or shareholder interests, and that new sales arrangements would be made based on market conditions. On another note, the sales brochure for the Coastline in Yau Tong, another project under the developer, has now been uploaded. The smallest open plan unit starts from 210 square feet, with 1 and 2 bedroom flats accounting for 70% of the project, which may be launched this month. That's all for this episode. See you in the next.